Good afternoon, everybody. Going to go over our Forex trades for today, Thursday, November 12th. We didn't trade yesterday because it was a holiday. Banks were closed, bond markets closed. So banks are the biggest players out there. So with them being closed, volume's going to be down, volatility is going to be down. So we stay out of the market on days like that. We did have 7 trades between, a few swing trades that we had on prior to yesterday. So we got out of some swing trades, whether it was last night, during the day yesterday, or even this morning, because we had our orders out there. Out of the 7 trades, we lost 2.9 pips. It's just like, it was a tough day, or last 2 days, I should say. Had some winners and then just some losers that just hurt us a little bit. We'll go over them in a second. First, just want to touch base on some of the economic news. Really no data from the government, but Bank of America lowered fourth quarter GDP estimates. What else? The Federal Reserve, I believe he's from Chicago, Evans. He's not confident that the Fed will reach the inflation target. He says risks of rapid increase in policy rates if inflation were to pick up seem overblown. So he's totally in the camp of not raising rates. We did come across, another thing, one big data point from the government, excuse me, that came out was shipping, trucks and rail and ships as well, is way down. It's down to the lowest level since 2011. And it also, not only is that at that level, it had the biggest monthly drop in years. It's obvious that the economy is slowing, right? So here the Fed wants to raise rates because they say so many people are back at work and the economy is good. The rest of the world is caving, and if shipping is slowing dramatically, rail, trucking, cargo ships, if that's, and we're not only that, we're heading into the holiday season. Those sectors should be picking up, right? Rail, trucking, and shipping containers. That freight section should be picking up for stores ordering and getting their shipments in ready for the holiday. You got the Thanksgiving of the Black, whatever it's called, Black Friday sale, and then all the way until Christmas. But it's the complete opposite. It's not only slowing, it's falling off a cliff. So the Fed, again, we've been hammering this and hammering it. The Fed is just not seeing it. One other thing we wanted to talk about real quick, and we've been very negative on housing for many reasons, as you've known from other videos. We did come across a piece, I forget who the analyst was that wrote it, but he's predicting that the housing bubble that the Fed has created, is somewhat of a bubble, right, is about to pop. And some of the things he just points out here, he said the Fed believes they must increase rates by 0.25% in December to regain some type of credibility. He says mortgage rates will rise immediately. The government is now desperately trying to keep balls in the air, allowing low-income buyers to purchase homes with only 3% down. That's what got us back into trouble in the first place. Remember those days back in the late 90s, early 2000s? 3% down. Some mortgages were no percent down. It's insane. Freddie, Fannie Mac, and FHA are guaranteeing these loans with tax dollars. All 3 of these agencies are, all intents and purposes, are insolvent. So he says, what's another few $100 billion of losses hoisted on the backs of taxpayers? Anything to keep the farce of economic recovery storyline alive for a little while longer. He says, at this point, there's no scenario that turns out positive for the housing market. Now, this is an analyst for housing, right? If the Fed has the guts to raise rates, the housing market will tank because mortgage rates will rise. If the Fed chickens out, it will be because the economy is clearly in recession and demand for overpriced homes will plummet as unemployment rises. Home prices have risen so far above fair value at this point, the market's already beginning to topple. Flippers are getting stuck with houses they can't flip for a profit. Hedge funds have stopped buying and have begun selling. We've been hammering that. Hedge funds stopped 6, 7 months ago, 8 months ago. Not all, but I know the biggest one out there stopped. I haven't heard of them selling. This guy claims that some of them are starting to sell. That's just going to put pressure on prices. Anyone foolish enough to have been lured into this market in the last few years will be underwater in no time. The foreclosure train will be leaving the station shortly. We've been here before. It was 10 years ago. Some people never learn, he says. I wonder what the oligarchs will pull out of their hats after housing bubble part 2 pops, he says. So I just wanted to throw that out there. Kind of interesting. We've been very negative on housing, and here's an analyst just coming in and nailing what we've been saying, bringing out more points than we brought out. But it'll be interesting to see what the Fed does. They're in a real bad spot come the December meeting, and as he says there, if they raise, this is a scenario. If they don't raise, this is a scenario. So neither scenario sounds very good for the economy and for housing. So let's get to the 7 trades. First one you're looking at here is Euro CAD. It was a scalp that we had 20% of our normal size. We pieced out of this. We were short from 1.41996. We pieced out. This is the average where we got out, 1.41848, picking up 14.8, or size adjusted 2.9. This is one that hurt the second trade. This first trade was Tuesday evening. We were long this from 0.65680. Again, this was a scalp that we had 30% of our normal size. We pieced out of it, and this is the average price, 0.65762, picking up 8.2 pips. The second was a scalp that we had 20% of our normal size because we were risking a little bit more than the other evening. Long from 0.65714. Just wasn't working out for us. Went in our favor a little bit off the bat, and then started to sell off. We lowered our profit target, and we also adjusted our stop loss as we shut the computers down for the evening. Basically looking at when these bottoms are taking out here, and we sold at 0.65399, losing 31.5 pips, or size adjusted 6.3. It's actually come back very close. Actually, this morning at one point it had popped all the way back up to where we sold, actually maybe even a little above there. Next trade, Aussie dollar, was a swing trade. We were short this from the 9th, 0.70708. You can see what it did here. It came down. It was consolidating. It started to break. In hindsight, we should have covered as soon as it took out of this top here in this consolidation range. But we decided to give it. That was about 0.70, call it 3738 area. We decided to give it basically to the 50 area, and we got taken out 0.70522, making 18.6 pips, or size adjusted 3.7. But we could have been making a lot more if we had just covered. We left, let's say, at least 12. We could have done the same thing if it took out 0.7040. So figure 10 to 12 pips we left there on the table. But in the end, we'll take the trade. Adjusted for size 3.7. Euro dollar. This was another swing that we were short. This 1.07642. You can see what it did. It came down hard last night. When we woke up this morning, we saw this big downdraft, and you can see the big long candle wick and then the bounce up. When you see that, that could be an exhaustion of the sellers. We came in this morning around 7 o'clock or so, and we saw that this happened overnight around 3 o'clock in the morning, 4 o'clock in the morning. It looked so far like that was an exhaustion of the sellers. And not only that, it didn't take out these lows from the other day. So it was in this consolidation range. We decided just to cover and take the 43.4 pips, or size adjusted 4.3, as we had 10% of our normal size on that. Pound dollar, we had 10% of this as well. We were short this 1.51746. Went against us the whole time. Not that this was close to being stopped out. We only had 10%, so we were risking more than that. The same thing. We came in this morning. We saw that it had come back. It was relatively close to pushing, 15 pips away. We decided to cover as soon as we came in this morning, losing 15.8 pips, or 1.6 size adjusted. And the last one is pound dollar. This was a scalp that we had 20% of our normal size. We were risking much more than this. Same scenario as that second trade in the New Zealand dollar, US dollar we showed you. Pound dollar just never worked out for us. Went against us. When we shut the computers down for the evening, we lowered our profit target. We also lowered or adjusted our stop loss. wants to take out this whole little consolidation area. So we lost 41.5 pips or 8.3 on a size adjusted as we had 20% of our normal size. So that's it. 2.9 pips on the downside after 7 trades. So not horrible, but not very good either. So we'll see what we are all flat, and we'll see what tonight and tomorrow brings us. All right. So that's it. If you're still trading now, good luck. If any signals come out, they'll be coming your way. And we'll be back tomorrow, assuming you get some action tonight or tomorrow morning. Have a great rest of your day.